Hello, good morning and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Wednesday the 12th of January. Now, markets have started to take a little bit of a turn again. The selling pressure that we'd seen through equity markets last week is starting to rebound a little bit as Treasury yields have started to roll over, or at least show signs that the huge rise that we'd seen early in January has now started to stall slightly. The testimony from Federal Reserve Chairman Jay Powell yesterday didn't really add too much fuel to the fire on those bond yields rising higher. There was not too much hawkish rhetoric from Powell. So subsequently, markets have taken a bit of a stall on those bond market moves. And that's sort of started to see that the pressure may be coming through on the US dollar on the downside, starting to see that across Forex major pairs. And I'll show one that's really important, I think, that is starting to show dollar downside move. The focus today will certainly be on the inflation data for the US. The inflation is expected to, on the CPI, rise to 5.4% on the core data. So it'll be very interesting to see if that does continue to move higher, seeing as other metrics from the ISM are starting to show inflation just beginning to top out slightly. The charts we're looking out for today will be the dollar Canadian, where the Canadian dollar has been strengthening against the US dollar as the oil price has been rising. And it's been a key break of support. I'll show that on the chart. We're also looking at the oil price itself breaking through a key level of resistance on Brent Crude. And also looking at the DAX. These equity markets are starting to rebound. So the DAX is starting to move higher again. So let's have a look at these charts. Okay, and on to the Infinox MT5 platform. And just starting off with dollar Canadian, this is a pair that I don't often look at, but it's got a very well-defined head and shoulders top pattern on the daily chart. And it broke down to complete that pattern yesterday. Decisive downside break through the neckline support that came from that reaction low that we saw at 26.04 back in early December, and that now completes the top pattern. Effectively, this now means that the market is implying a move back towards the 123 area of these old support lows from October. So the market will now be looking at the old support of the neckline as a basis of resistance. This sort of purple area that I've got here, 26-figure area up towards 26.20, 26.30 is now a basis of resistance, and the pattern remains intact until that right hand shoulder is broken to the upside 28.10 area. So there's confirmation also on the relative strength index as well, the RSI breaking below 50 and failing at 50 and moving below that reaction lower into the 30s. So this is increasingly negative momentum now on that Canadian dollar. And you can see here on the 4-hour chart, you've got initial resistance, you could argue up towards 26.90, 27 figure area, again on that 4-hour chart, increasingly negative. So little technical rallies are now a chance to sell. And one of the reasons driving that dollar Canadian lower is this oil price, which has been pulling higher. Strengthening oil is positive for Canadian dollar, and it's broken out on the Brent crude price above that 83.40 mark, 82.60 to 83.40 level of resistance there. Continuing this uptrend on the daily chart. I've got it on the 4-hour chart. You can see old breakouts tend to be seen as a new basis of support. So that has been happening fairly consistently on this chart on the Brent crude oil. Is that you now see that the support of the breakout coming in 82.80 to 83.40 is, again, as I said, a basis of support now for little intraday pullbacks. You've got the uptrend coming in around that 82.20 mark. So the market certainly looks as though it's now going to be pulling back towards these highs of 86 to 87 area. And finishing off with the DAX, the corrective move that we've seen in equities in the first part of January certainly started to turn around. Big pick up from that reaction low around 15,700, the other which was on Monday. And it's now strong bull candle yesterday. Good opening move today. You can see on the 4-hour chart a break above the lower high of 16.020 area. Now continues that recovery move, and you've got the 4-hour chart which is improving on momentum. The next level of resistance is 16.155, and if that can get broken, you're then talking about a move back towards these highs around 16.300. But certainly the turnaround given the fact that the RSI on the daily is also still above 50 and looking positive, it's looking decent now for a run back towards these highs again. In terms of support levels, you'd be certainly looking at this higher reaction low at 15,880 area as a higher reaction low, but certainly the momentum is now positive. So thank you for watching this video. I hope you found it informative for your trading. I'll be back on Friday where we'll be looking at the US consumer data. We've got retail sales and the Michigan sentiment. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Good luck in your trading, everyone.